Hey guys, Mike here. So, oh boy, what a day at the end of the market, right? What a complete and utter rug pull. And I think people missed what actually happened during the middle of his press conference. That's what set the market down. And it wasn't so much what he said, it was something that came out during the press conference, which we're going to talk about and I'm going to show you. We're also going to go into some of the stuff that he actually said, speaking of Fed President Jerome Powell. And then one thing that came up in the press conference that I talked about yesterday, dealing with the small and medium-sized regional banks. And of course, he had to lie through his teeth about it, but that's okay. I don't expect him to tell the truth, and I'll show you why. But boy, look at this right here. That stuff went from green to red with a quickness. Look at the banks down there. Oh yeah, they got hit hard. And I mean, if you look real quick, if you don't know, they did 25 basis points, right? So that puts us up to 4.75 to 5%. Importantly, also what they did was they come out with economic projections, right? So their peak interest rates, they have around 5 to 5.25, with the peak rate being 5.1. Inflation expectations are projected to be 3.3%, which is higher than 3.1 they had in December. The unemployment rate projected at 4.5. So think about that. How are we getting to 3.3% inflation, and then the unemployment rate is going to go from 3.7 to 4.5? That's just going to be just going to slow the economy, or something going to happen that could absolutely cause something like that? That's what we got to figure out, which I think you know what that something is, right? And I'm not even going to say the word. But here was the market. The market actually responded, stayed level and then went green, right? When he starts to speak and stuff. And it's like, oh, this is great. It's great. Love it. And then it's like, oh, wait a minute. What the heck just happened? And so here's what he had to say. And then I'll show you what caused the market to sell off.
I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe.
I'm sorry, Jerome. What'd you say about deposits?
All depositors' savings are safe.
One more time.
All depositors' savings are safe.
And just so we heard the key word in there, what was it?
All
deposits are safe. All deposits are safe, not just the 250K, right? They're insured. So that's kind of interesting. And then while he's talking, like, wait a minute, the market says, we hate this. What happened? Oh my God. And just completely tanks. Right now, what could possibly cause this? I just don't understand what happened. Well, what I found for the members and you guys is this right here. Janet Yellen did a rug pull right in the middle of his speech by totally contradicting him. And let's click on this. She came out in the middle of the speech and said, or at least this got leaked somehow. Yellen says Treasury is not considering or working on a unilateral expansion of deposit insurance. Once again, to make sure we heard it correctly, how many deposits were you talking about there, Jerome?
All depositors.
That's right, all deposits, right? And it's like, wait a minute, all deposits, all 19.4 trillion? But remember, what's been propping the banking system up? These stocks have been going up recently. Hey, they're going to back them all, probably. They're trying to figure out a way to back all deposits. They're already doing up to 250K. That's already, right? So that covers all the middle class and below. So the only thing they be doing, companies and the old mega millionaires and billionaires, right, with all their cash in the banks, right? And so the only way to do that would be to use taxpayer dollars, as far as I can see. Put in the comments if you think there's some other way to do it. I can't see it. Where's all that money coming from? Right? I don't see how it's happening. Now, something that came up, and just in case you didn't see the video yesterday, I said this about what we need to start watching for when it comes to small and medium-sized regional banks, which are at the most risk right now than any other bank as we've seen. Here, another thing we got to watch out for in the future here is commercial real estate, because small domestic banks, look at the amount of commercial real estate exposure they have with those loans over there. That is twice as much as those large domestic banks. And so if commercial property, starts to head south and loans start to go bad, that could be huge, because these are big loans. I mean, this is commercial real estate, right? So that's something else to watch for, and can definitely weigh on it. And of course, why am I mentioning this again? Because it came up in the press conference today.
I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy, but there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are focused in commercial real estate?
So, we've well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong. It is sound. It is resilient. It's well capitalized, and I really don't see that as at all analogous to this.
And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. Now, why did Jerome have to lie through his teeth? One, because, hey, he understands. He has to show confidence, a full front, right? Blah, 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 blah. Okay, that's what he has to do. But then something else came with the press conference. What I'm going to show you, what I'm talking about here is that ship has sailed. Those loans are already out there. And let me show you what I'm talking about. Loans, by the way. Like, there is a boatload of these loans, by the way. I finally found the amount that are going to be coming due here very soon. And just look at the amount of loans here. There is $1.5 trillion in commercial real estate debt maturing in the next 3 years. The bulk of this debt was financed when base interest rates were near zero. And now this debt needs to be refinanced in an environment where rates are much, 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 much higher and liquidity is a lot less. And I'm going to show you another chart to show you why this is a problem. And when I say liquidity is a lot less, this is the banking standards right here, okay? There's 3 charts like this. This one just has to be for commercial and industrial loans, right? For small companies, small to medium-sized companies, okay? And when it's going up, that is the standards for loaning out are tightening. Now, you see it happen in the past. What has it led to? Recessions, because why? There's less money out there. The companies are struggling. They can't make payroll. They can't grow the companies at all, right? And so you got to ask yourself, if you're a bank, right, your job is to somewhat make money. That's what you're a business, right? And all of a sudden, these companies start coming to you in bad economic times, and they're saying, hey, we want to refinance, but we want to refinance at a rate that's like 5 times higher than we actually got the original debt at. Is that you think that's a good investment on your part or a bad investment, right? So that's the other thing you got to look at. And so 1.5 trillion, nothing to shake a stick at again. And remember, we're talking about if there is a recession, prices falling. So the values of these properties, all of a sudden are going down and likely will be underwater as well. And so can they even get it refinanced? That's the big question. If you're in the commercial property sector, I'm going to talk to my friend who's in it. Let me know what your opinion on that. But here's what I'm talking about to tie this in. He's asked about, understand how inept these people are, right? What just happened? We saw 2 banks in this country, another over in Europe, basically go under, right? But here's the kicker. They already knew months in advance what was going on, right? And they were even talking to the banks and couldn't stop it.
The minutes of the February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed, do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't recall the specifics of that. It's quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as is now on the public record, the supervisory team was apparently very much engaged with the bank repeatedly and was escalating. But, nonetheless, what happened. And so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of I'll come back to that, the speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible, regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
And again, what's surprising more than anything else is how they get surprised. But the bank run was so fast. It's much faster than usual. Just can't believe it. We're in different times, dude. Wake up, right? I mean, you say one thing, it spreads so fast across the internet, and you got to ask yourself, and I don't know the answer. If you do, put it in the comments. Somebody had to leak what was going on inside that bank. talking about SVC, Silicon Valley Bank. But they were selling at a loss, right? They were selling all this stuff at a loss. And that's why all of a sudden this bank run started and created this panic. Who leaked it? Do you know? Because I know they're doing an investigation, but somebody on the inside had to leak that. So I'd be curious to know who it was, if they ever even find them. Because remember, I showed you with the executives, they were selling stock 2 weeks prior to this, right? They were getting the heck out. They were cashing out millions, baby, right? They were like, we're out of here. And so, let me know if you know that or not. But again, the loans are already out there on the commercial real estate, right? If we go into a recession or the economy gets really bad and these commercial properties start coming down, there ain't nothing they can do about it. They know it. So what do they have to do? The only thing they can do, lie through their teeth and say, we know we're good. We've seen it. Plenty of liquidity. Nothing to see here, right? They did the same thing in 08. They said the banks are strong. And then next thing you know, all heck broke loose, right? So again, not blaming him for saying what he's saying, but just understand these folks, remember, you're talking about 400 PhDs up there. And he said it again today that basically your guess is as good as mine how it's going to work out with these rate hikes and liquidity. Now, how things are going to work out, we don't even know, right? So the captain of the ship steering the Titanic, baby. Whoop! Is that an iceberg? They're lost. They're lost. And that makes you feel kind of good, right? Imagine being on a ship like that and they come on the intercom and say, there might be icebergs out here, but we don't know. We're just going to try to make it the best we can, right? Wouldn't that make you feel really good? You're going to sleep good that night on the ship? But that's our government, right? Feel confident about it. Now, the reason why they did 25 basis points really because they knew they couldn't do zero, right? If it did zero, what would you see happen? A lot of people say, whoa, the banking crisis must be even worse than we thought if they're already just putting on the brakes and doing zero. And we thought they were going to do 50. That's what they were hinting at. They're going to be so tough, right? Number two is they pretty much given up on inflation, right? The inflation fight. So 25 was kind of that, medium thing and everything like that. But you better hope they get the inflation down because a lot of people say, why, how come they're so, staunch on inflation going down as fast as they can get it down? Because it is terrible for the economy and in most people, right? I mean, let's say 250K or lower, but especially you're making like probably a household bringing in less than 75K, 50K, it's expensive, man, to buy stuff. You're feeling it. The rich love it because all their assets have gone up so fast in value. Their wealth is just growing exponentially. They're not worried about buying, food for their kids or anything like that, or they can go buy as many yachts, stuff they want. They don't even feel it, right? In fact, it's actually good for them, right? It's actually good for middle class in a way at certain levels because the housing prices went up so much and everything. And so, that's something about stocks, 401ks, IRAs, all that good stuff for a while until we hit 2022. It's a whole different ball game. But if you look at small businesses, it's really not good at all because what's going to happen? What are they going to do first? They're going to start cutting people. They're going to start cutting payroll. They're going to start cutting pay and everything else. And you see their payroll payments going down, baby, heading down, right? But what ain't heading down? Rents. And that's the problem. The real estate part of this, the rents, oh my goodness, still going up, right? Hadn't even flattened out for small businesses right now. The other thing to look at is, and this is why they want a recession, folks. If you don't know this is why they want it. This is a picture worth 1,000 words right here. You can see this formation, that this is the Atlanta Fed Wade Growth Tracker, right? Overall, it's coming down still really high compared to historical standards. Look at this. It looks pretty much the same. And then what happens? Boom, recession. That's how you get it in line, right? That's the dot-com bubble. Here's about the same formation. It's coming down slightly. Boom, another recession. That's how you get it down. Okay, that's the only way really to get it down from where it's at right now. Okay, now I could do an hour-long video on this subject, and I'm going to do something on it for sure. I mean, I literally have thought about just starting a second channel and not to do with finance, have to do with just the middle class in general. Really, I mean, I swear to God, that's probably what I call it, the middle class, because I hate parties. I hate the party system, but if I was going to create a party, it would be the party of the middle class, because the middle class, if you don't know it, and if you ain't felt this yet, if you do believe in this, let me know in the comments. But I feel like we're that sandwich meat in the middle of the hamburger, right? Got the the wealthies on top right here, the rich and wealthy, the poor beneath us, and we're in the middle class right there, just getting eaten up, right? It's the favorite part of the hamburger. Why do I say that? Because we have to go out there, and mostly we're working jobs, doing our thing. We have to support the bottom part, right? The people on the welfare system, things like that, which is fine. I'm good with safety net programs and stuff, but we have to do that. But then we have to turn around, right? And we're buying the products from the rich and wealthy, and they're getting all these crazy tax cuts that we can't even get, right? And you always hear, like, we're going to take care of the middle class. We're going to go ahead and look at your taxes. Look at how much of all these different deductions and credit we're supposed to get. Well, of course, it gets phased out. And it gets phased out really early on if you look at your taxes, right? Which is just ridiculous. Child care, right? We pay 4 times as much than any other country. 4 times. Is it that much better? Right? But when you look and when you're trying to get the credit or the deduction and stuff, it just gets wiped out as soon as you get above a certain amount. It's not even a lot. It starts at like 65,000 or 70,000. They start taking that stuff out. By the time you get to like, what was it, 100, 125, like nothing. It's like you get 10, 15% if you're lucky at that, right? Or something like that. So, I mean, that's the kind of stuff, and I say the middle class gets screwed in this country. It's not that I'm not grateful for a country where I can go make, good money and have a job. It has nothing to do with that, right? But it's just, I deplore the tax system. I deplore the system in general, especially where the economy is set up. It is ridiculous, okay? And so, again, when I'm going back to this wage thing, that leads me back in the chart I showed you. That's why I'm about to rant, or was ranting, is the fact that, don't you love how they've actually proven already that I think it's like 30%, if not more, of inflation is actually, and I've talked about this before, price gouging. The companies like Walmart and them just raising their prices through the roof, way more, and then just getting on these earnings calls, and I showed you how many and told you how many I've listened to, just bragging about record profits. And it's like, what? Wait a minute. And it's what I hate, though, is what's Jerome Powell them saying? You got to lose your job. Your pay has to come down. That's the way to fix this, right? Not the price gouging part. No. And I love how they want to cap what we can make it work. The people who provide the service, who make the product, but the people at the top, all those executives, I've been in management, trust me. All the executives, they ain't capping their stuff. No, they don't even talk about that, right? They don't talk about capping the price for these companies and how much they can charge stuff, right? Don't worry about that. No, but the worker, whoa. Ooh, how dare you try to make more money? Not happening. I mean, before 2020, I don't know if you had friends like this or you one of them. I know people that didn't get a raise for like 2 years. 2 years at their job. Now they're like, this is great. They left the job, got a raise, got more raises. Like, this is fantastic. They ain't got a raise in 2 years. But now the Fed's like, ho, got to stop that. And I'm like, that's ridiculous. You realize because it's public knowledge, if you're a public traded company, you can see exactly what your executives make. And it amazes me how they'll lay off, 20 warehouse workers out there at Amazon. But God forbid you lay off one of the 300 vice presidents you got or something. I don't know how many they got, but it's a lot more than what they need. I mean, we used to joke about it when I was a manager. Like, how many vice presidents do you need to screw in a light bulb, right? But God forbid they do that, and that's just an angry rant for me. But when looking at that chart, that's how they get it down. That's how they keep you under the thumb right there. It's like, we're going to bring down these wages with a recession. That's going to happen. I mean, how else are they going to do it? It's historical. How else are you going to get that chart down? Right? And then I was listening the other day, and it was like Chat GBT or whatever that stupid thing's called. Oh, they're already talking. Companies are already talking about how many people they're going to lay off for that thing. Like what it will be able to do, like call service centers and all that stuff. All kinds of jobs that are repetitive. They're gonna plug up that thing and do it. Forget you, right? Hey, love automation. Everybody loves it until they're the ones getting the pink slip, right? So, I mean, and don't think it doesn't, even if you don't get the pink slip, you get to stay there. Guess what else you get to do? Jimmy gets fired. Guess what? You get to do 2 jobs now. Look at Walmart, Publix, any grocery store. Where the baggers are gone. We're working for these grocery stores. I got to check it and bag my own groceries. I'm not getting any benefits. I used to do that when I was a teenager. I didn't think at my age I'd have to be bagging groceries again. I mean, how crazy is that? I mean, you ever sit there in line going, burp, burp, burp. I had to do a whole bucket the other day because they took out all the clerks in this one store. Some of them are beep, beep, weighing bananas. Did you ever think in a million years you'd be doing that again? How crazy is that? Anyway, I'm going to stop right there because, I need to create a second channel for that stuff, I guess. But let me know if you're interested in that one. So hope you got something out of it. Tomorrow's going to be interesting. We'll see how the market reacts off of the big sell-off today. I will say on the QQQ, I swear that candle at the end was a topping tail candle. I could be totally wrong, but that usually means reversal since, the NASDAQ was up like 10% in a week or something. But again, could be totally wrong. Not really into the candle pattern, but let me know in the bottom if you look at the cues and if I'm correct on that one. But anyway, hope you guys got something out of it. Hit the like, subscribe button if you did. And I will see you tomorrow for another interesting day. Put in the comments, green or red. Where are we going from here?